Zsolt, does Slovenia need a bailout?
In my view, the macroeconomic situation does not justify the need for a bailout, and I also don't expect that Slovenia will ask for help.
Slovenia is facing a banking crisis, though. Is everyone wrong to worry?
Everyone is so worried because there have been a wave of crisis, started in Greece, then Ireland, Portugal, then to some extent Spain, now Cyprus. So it's very fashionable to ask which country will be the next domino. But if you look at the macroeconomic data of Slovenia, the public debt is still below 60% of GDP. It is expected to rise over 60% this year and even 66% next year. And even if you take out the possible bank bailout, it may rise to 75%. But this is nothing comparable to the public debt of Greece or even Cyprus. Also, if you look at unemployment figures, they are high and rising, but they are about 10 and less than 11%. Again, nothing comparable to Greece and Spain, where the unemployment rate is about 27%. So the economic situation in Slovenia is weak. There is a major banking crisis which should be properly addressed. But if the Slovenian government will be able to handle this banking crisis properly, then the fiscal situation, the public sector situation in itself does not really justify a need for a bailout.
But still, there is Eurozone pressure for Slovenia to address its public debt.
A major problem of the Slovenian economy is that the public sector remained too large, including in the banking sector, and now, no doubt, Slovenia is going through a major banking crisis, and since the banks are partly public-owned, this will have a major impact on public finances. But if you take aside of that, what you see is that the Slovenian economy is still quite competitive. For example, the pharmaceutical sector is a leading also in terms of innovation. The labor force is well educated. Structural deficit is low, and not just low, it improves significantly. So from 2011 to 2012, there was a major improvement, more than 2% of GDP improvement, which means that there was a very significant fiscal consolidation in Slovenia. By the way, I think that this significant fiscal consolidation also contributed to the weak economic GDP growth. Last year, GDP fell by about 2%. Also, an additional 2% GDP fall is expected for this year. The current account deficit turned to a surplus. Yeah. So Slovenia has an approximately 4% current account surplus, which means that the external debt is declining, which is again a positive signal, and suggests that the financial situation of the country is improving.
So how does Slovenia fit into the macroeconomic picture of the Eurozone? If it does seek help, would it be destabilizing?
Slovenia is a very small country. Its annual GDP is somewhat over 40 billion euros, which is a very small share of the euro area GDP. Also, the banking system is not that large, nothing comparable to Cyprus. So, as I said, I don't expect that Slovenia will need a bailout, but even if it will be forced to take a bailout, I also don't expect it will have any major impact on the rest of the euro area.
What about a lack of market confidence possibly knocking back any progress being made by the Slovenian government?
We can look at that there was government bond auctions last week, and the yields were even somewhat lower than expected. The 10-year yield is somewhat below 6%, which is quite high. But since the public debt of Slovenia is not that high, if the borrowing rates are just temporarily higher than, let's say, that of Italy or Spain, then I don't think that it would seriously endanger fiscal sustainability. It will largely depend certainly on the measures that the government plans to adopt this year. If those measures will gain credibility, then I expect that government bond yields will gradually fall. If not, and the government messes up, then certainly there is a probability that the patience of market will disappear and bond yields will increase to such levels that a bailout would be needed. But as I said, I still see a much higher probability that this will not happen.